What's up everyone? Welcome to another module. In this module, what we're going to talk about candle trends, like how do trend lines like these, translate into candles, which is very important because once we understand what candle trends are, and what kind of a trend is going to influence the candles to move to a certain, price or to a zone on the charts, understanding this and breaking this down into candles and then WickFills is very important. So that's what we're going to do now. So let's take a look at this, right? This is a very basic explanation of a trend, which is an uptrend, right here, which is an uptrend. So what happens in an uptrend? Very simple, we already know. This is where we make higher highs and we make higher lows, higher highs and higher lows. Very basic concept, very simple concept. We all know this. We all kind of have gone through this. Very simple. We know this, where we make higher highs and higher lows. Now, when you're talking about candles, now you need to understand, okay, what does it mean when we're looking at candles in the same way? So when we're looking at candles, let's say, for example, we have a support, hypothetical example, we have support, and on the support, we have a candle that's closing bullish, and the reason why we know this is a support is because the previous candle was bearish. So what happens in uptrends? In uptrends, price creates supports, your higher lows, and then from there price continues to push up. So in this example, we are hypothetically saying that, okay, price has created support, which is where you have a bearish candle and then followed by a bullish one. Now you have support formed. And if you're saying that trend is bullish, the next candle should now mimic a move something like this, right? Where we continue to make higher highs and higher lows and we continue to push up. That's what should happen. So in essence, now the next candle should respect this previous low and create a higher low and a higher high. This is, in an ideal world, what the next candle should be doing. We should be making a higher high and a higher low for price to continue to push up. Because if we're saying that the trend is bullish, then the candles have to continue to be making higher highs and higher lows, right? So whenever you're looking at a higher high and a higher low, the only condition you're putting on this is the only condition you have is that as long as, got the blue. As long as the previous low right over here is respected by the new low, then there's a higher probability price would continue to push up. This is very important. So whenever you're looking at buys, you're making sure that if you're looking at the 30-minute candle or a 1-hour candle, I would say maybe look at the 30-minute and the 1-hour only. Don't take a look at the 15-minute because 15-minute candles have very weak confirmations. They're very weak confirmations. 30-minute is way better. On the 15-minute, what you may find on the 15-minute, what you may find is that this candle, it breaks the low of the previous candle and then continues to push up. That's what you may find on the 15-minute most of the times. So if you have your stop losses below the 15-minute candle, let's say right over here, and the next candle, decides to break the low here, then you're stopped out. Right? So which is why 15-minute is the weak confirmation time frame. This happens on the 30-minute as well, on the 1-hour candle as well, but not as frequently, right? And most times when it will happen on the 30-minute and the 1 hour, then maybe price will continue to go in the opposite direction, right? But for the most part, what I've seen is that if I'm focusing on the 30-minute time frame and if I'm focusing on the 1-hour time frame, this right here, this candle right here, this low, where it's making this low will respect the previous low most of the times, right? Most of the times. And that's where the stop loss goes as well. So whenever we're talking about, candle trends, whether it's bullish or bearish, let's say now, we talk about a bearish candle trend, right? A bearish candle trend would look something like this. Very quickly, we're going to make like a lower high, we're going to make another lower high, we're going to make a lower low here, and then boom, boom, lower low here, right? Very, very simple. And this is the same thing that we can take a look at on the candles, is that if we're creating resistance And we know that resistance is formed once you have a bearish candle forming after a bullish candle. That's where we have resistance formed. So if we're looking at the candles, we're saying, okay, like, you know what, the trend is down, we should go bearish. The candles themselves, let me remove this, bring it down a little bit better. The candles themselves should continue to make lower lows and lower highs, right? That's a lower high, and here we have a lower low. Candles should continue to break the low of the previous candle, but respect the high of the previous candle, which is why there's high probability for price to continue to push down. Again, only on the 30-minute, only on the 1 hour. That's it. Candles have to make lower lows and lower highs for price to continue to push down. That's all what you got to know about candle trends. Nothing more. No complication, no nothing. Just the fact that if you're looking at the, okay, imagine this, right? Imagine you're trading the 30-minute candles, and now what you're saying on the 30-minute candles is that, okay, like, you know what, if I'm trading it on gold or pound yen or pound USD, the 30-minute candles on these currency pairs, they're at least, you know, 20 pips, 25 pips, 30 pips sometimes. Gold 30-minute candles, when it's very, very volatile, it's about 50 pips, you know, 55 pips. So don't you think if you can identify where the next 30-minute candle is going to move, you're going to have a higher probability to have a profitable trade. So which is why it's like this. So now let's take this information and let's take a look at WickFills. Now, WickFills is basically price continuing in the direction of a wick, which you may see to the left-hand side. So the most simplistic way to explain this is that for the most part, whenever you have candles, let's say this is a bearish candle, whenever you have a candle and the candle has a wick in the direction where it's moving, there's a very high probability that the next candle will continue to fill this wick, the next candle. In essence, what the next candle may look like something like this, like we can wick up, we can push down, fill this wick to the left-hand side, and then from here, if we want to go down, we can go down. If we want to go back up, we can go back up. So that's exactly what the wick fill is, right? So, and in the same way, if you have a wick all the way to the left-hand side, which is towards the bottom, then step-by-step candles can continue down to fill that wick here as well. But in this example, what we're going to talk about, we're only going to talk about the daily wick fills, 4-hour wick fills, and then we're going to talk about the lower time frame market structure. Because what we need to understand is if this is the daily candle, right? What's the market structure that looks like to create this daily scenario, right? Let's say if you're looking at the daily candles and you're saying that, okay, if this is a gold daily candle, then this wick could be like, you know, a 50 pip wick or whatever, right? 40 pip wick, 50 pip wick, it could be that. And you're thinking that, okay, I know about wick fills, and all I got to do is to position myself in a way for me to execute on the trade to maybe grab this portion of the wick and have a profitable trade. To do that, you need to understand what sort of a market structure you need in these higher time frame candles on the lower time frames. So let's take a look at that right now. Okay, so now, first what we need to do is we need to break this daily candle into, let's say 6 4-hour candles. Now, when we take a look at the daily candle, we can see that the first candle, it moved up. So maybe the 4-hour candles may look like this starting off, trying to move up, and then we had price pushing down. So we can push down now. We have a bearish candle over here. We have 2 bearish candles, 3 right over here, 3. We continue to move down. And looks like we created a wick on the daily, which you know, may look something like this for price to push down. And then we had price moving up like this, right? 1, 2, 3, 4, 5, 6. Now, if we're looking at the daily candle, breaking this daily candle down into 6 4-hour candles may look something like this. In an ideal scenario, we moved up first to create a high, and then the bearish momentum came. Look at the candles. We continued to make lower highs, right? Lower lows. This one here as well. well, this was a high right over here, and then this is a lower, lower low, lower low, lower high, so on and so forth, right? We continue to push down. Now, and the last candle which we can see is what it did is it broke the high of the previous one and it closed bullish, creating this wick up. Now, if we're taking a look at the daily and we're trying to identify that, okay, now what sort of a market structure would we need on the 4 hour to say that, okay, now the daily candle can push down? Because in reality, this move up, this is the wick on the daily, right? So that's all we're trying to do. So if the new daily candle starts now, in an ideal scenario, the new daily candle would look something like this. We would push up, oh, that's the blue. So we would, oh, this is still the blue. We would push up and then we would continue to push down. That's what it would look like. Now, if we translate that higher time frame into the lower time frame, in the lower time frame, we may have something like this, like price starts to push up, maybe creating that top wick, and then maybe like, volume starts to go down, right? So at this point still, we can't sell because what did we learn? We learned that only execute when candles are printing in your direction. At this point, the candles are pushing up. So if we want this thing to form, maybe at this point right over here, we only have a daily candle that looks like this right now, right? Moving up. That's what we have. That's maybe what it looks like now, trying to move up. So then when you do get a candle that closes in your direction, this is where you can say, okay, now there's a high probability for the next candle to push down. Because if you're looking at the 4 hour time frame, and what we learned in the candle trends page, in the candle trend section, was that if you do have price time to push down, you need candles to break lows and create lower lows and lower highs for price to push down. So if we're looking at this daily candle, maybe now we've created that top wick for price to continue to push down, right? So when you have this confirmation, if you're looking at sells, and if you have this confirmation where we are creating that resistance, right? And we do have this low to retest, because whenever price is in momentum and there's volume in the market, there's a very high probability price will always retest the high or it's going to retest the low. That's going to happen all the time, right? So this low being retested, this one, this is the bottom of the wick on the daily candle, right? And if this is, let's say, 50 pips or whatever, then in reality, this whole range right here is probably around 40 pips, right? 40 pips. And this happens on the 1 hour time frame, the 30-minute time frame, the 4 hour time frame. On the 15-minute it happens as well, but the candle confirmations are not as strong. But here we have really good candle confirmations. Now, in the best case scenario, the highest probability of something to happen would be that the next candle breaks the low of the previous candle and we continue to push down. And your stop loss stays above the previous candle. Because for price to go down, the condition is that it should respect the high of the previous candle. That's the condition. That's the condition you're putting on price for it to continue to push down. Right now, on a lower probability, what can happen is, low probability could be that we could, continue to move up. That's a low probability. That can happen here as well. So we have to accept, so whenever we execute, we have to accept the outcomes. If we know that if we keep on executing on a market structure or an opportunity that overall has a higher probability of winning, then eventually you will be profitable. But if you take this loss as something very, very personal and something that you say, okay, like, now I'm a bad trader, my strategy doesn't work, this is all like, bad and this is all over the place. No, that's basically not going to work, because every strategy has a probability, right? And if you're executing on a higher probability strategies or a higher probability market structure, overall you're going to be profitable. So this is low probability what's going to happen. The high probability is that the next candle will break the low and continue to push down. And when we do retest this low, this is where we have the wick being filled. Make sense? So this is what we have wick fills. When we have wick fills, we have higher time frame market structure and we have lower time frame market structure. So the idea is to look at the higher time frame and visualize where you think price is going to go. And once you really visualize that, then that visualization, you're breaking it down into candle market structure and executing based on that. Sometimes, like, maybe this may not happen. Maybe what may happen is that the next candle wicks down and then closes like this, bullish, right? Or this candle does that or whatever. But you're getting these initial moves, these 20 pip bursts, or maybe even these 30 pip bursts of moves. Like, sometimes when price is in volume, it just bursts bearish or bursts bullish, right? So those things you're trying to catch. Very simple, but it requires a lot of patience because you have to wait for the candle to close. You have to wait for the candle to close in your direction. That's very, very important, right? So I hope you guys enjoyed this. Something like, to learn, something to go through the charts, being a better trader. That's all what we strive for. So now we're going to see you in the rest of the modules. We're going to look at some examples and we'll see you soon.